I think just from a really broad level, I think it's still a little bit too early.
Okay.
We have seen some good stuff from central banks. We've seen government step it up. But until we see those daily infection rates starting to plateau in Europe and the U.S., it may still be pretty early days.
In terms of the data and some of the key inputs that you're watching most closely right now, especially as we have another, 2 weeks till earnings really kick off in earnest. There's a lot of focus on jobless claims and how those numbers could still yet spike, that we haven't seen the worst there. What are you watching?
Yeah, so, as you mentioned, jobless claims is going to be the kind of the leading indicator into what's happening with the economy. We already know, I think, is going to be severe, but we need to start seeing that data coming in. But the other thing from a market perspective is really keep your eye on the credit spread. For us over the last few years, we've never expected recession, mainly because the credit sector has been so strong with spreads so tight. But now that you've seen that blow out, that's telling you that there's an increased risk of default and bankruptcies. Now, we don't think we're anywhere close to the GFC, the global financial crisis at this stage. But, that was a deleveraging event. Now, if we were to see credit spreads continuing to blow out and approaching those 2008 levels, which I want to add again, I don't expect to see that. But if we did, then we would start thinking about those imbalances starting to have to work through their system. And whereas right now we think it's a transitory shock, you can see credit spreads blowing out. It becomes a bit of a more drawn out and prolonged impact with some supply destruction, demand destruction.
Yeah, and certainly there's been a lot of focus on liquidity in different markets right now in general, the moves we've seen in the dollar this week, pretty dramatic as well. Your thoughts?
Yeah, it makes sense. We have the traditional safe havens like the U.S. Treasury, like gold. But ultimately, when people are trying to get rid of everything, they need cash. Now, at least currency, it's cash. So that your typical safe haven, the U.S. dollar, is the one that's going to survive through all of this. But unfortunately, it's going to be a bad impact for emerging markets. So ideally, we start to see the dollar starting to weaken out, which gives us an idea that people are starting to feel a little bit more confident about the system. And that would be, I think, a very positive sign if we can see weakness in the dollar almost persisting for a few days.